Hello, and hope you're doing well. This is Harun. Will be with you to review the US inflation data for May and see how market reacted to these numbers. As always, let's check the data first, and then we can see the market reactions as well. After previous week's NFP numbers, which was somehow good, these numbers and these data are the main or the most important numbers that we can have before next week's Federal Reserve meeting. However, they even thought whatever happens in this meeting, I mean, in this data, we couldn't make they changed our idea about the Federal Reserve meeting for the next week because we already know there is even no zero chance for rates cuts. But for now, we are 100% counting or pricing on holding the current rate for the next week. However, these numbers can change the overall idea of what Fed can do for July and September meeting. For now, the July meeting also still is under question what the Fed can decide there because let's check the numbers and then we can see why why it's in this kind. Why we think in this way. Uh, both CPI and core CPI, they increased by 0.1% in May. Much less than expected. Core CPI was expecting to increase by 0.3% after 0.2% increase in April. And headline inflation also was expecting to increase by 0.2%, repeating the same speed and or repeating the same pace of April. But both of them, they increased only 0.1%. On the annual scale, core CPI stayed unchanged at 2.8%, while market was expecting to see higher digits at 2.9%. The headline inflation also, while the market was expecting to increase to 2.5% from previous 2.3%, it increased only to 2.4%. There is an idea of, the tariffs can affect the inflation or not. Tariffs can affect the inflation, but as you know, we had a pause on them. So after that, we had tariffs for the very short term. Then we had a pause. And when the tariffs for the China for the short term, it was so high. But after the meeting, after their agreements on trade talks, so they made it much lower than the initial data and initial numbers. Generally, the tariffs are still not affected the markets. That's why. Maybe policymakers they make this argue that since the tariffs effect on the market is still not clear, so because that we didn't have these tariffs exactly happening so far, so we have to wait more and see how real market reaction can do there. So this is that's why most probably the policymakers they make this argument to hold the current rates and say that, okay, we're going to wait longer before making any decision. So that's why these numbers cannot be the improvement of cutting the rates earlier, but still there is some hopes. There is another number also we have to watch, and that's the real earnings. While the inflation is lowering, the real earnings increase, so which means that people's income is much more than inflation, which means that the people they have more money right now, their power, their purchasing power, the people's citizens' purchasing power is increasing. That means people's demand or the market demand can increase, which again is another sign for being more cautious in the market. So generally, these numbers, while they are confirming that inflation is under control, there is two numbers that we have to watch, two things or two important point that we have to watch. Number one, the real earnings is increasing very good. And number two, these numbers are still not affected by tariffs, as the tariffs were on a pause, and we can say that the tariffs can start from this week if they cannot agree with the US, the other countries, they cannot agree with the US. So generally, that's what happened in the market and the way that we can check or review the inflation numbers. So with these numbers and with these review on the data, now we can go forward and check the charts. Let's start with the dollar index chart. As you can see here, the dollar index is falling after these numbers since these numbers says that the inflation is under control. So which means that the central bank in United States can go for more accommodative policy. So which means that now we can say that, okay, higher for longer wouldn't be that such a serious program, but still, or such a service plan, but still we have to be more cautious as mentioned, because these numbers are not the numbers we can say that already they are affected by tariffs. So that's what happened. And also tomorrow we're going to have the PPI, which are again very important data to watch. With these data, with these numbers, let's check the charts for other assets. Checking the gold chart with the weaker US dollar, we can say, okay, uh, weaker US dollar and weaker since the holding the rates for longer, higher for longer, which means that the lower that while if we avoid this, which means that we can avoid the higher yields as well, which is again the positive news and the data for gold, so it can increase the gold demand. But at the same time, these numbers they are positive for stock markets, as you can see in the SP 500 chart, as you can see in Nasdaq or Dow Jones, all of them, they had a very good and positive reactions right after the right after the data published, which means that now the stock market's reaction is positive. Dow Jones moving a little bit about 4,200 for I'm sorry, about 42,000, which means that these numbers are saying that the Dow Jones is still increasing and on a positive, especially looking at the OBV and RSI charts. Totally, we can say that the uptrend is is supporting by technical indicators and fundamental data. So looking at these numbers, you can say that the risky market demands is increasing as the market risk is lowering. So that can be positive for the stock market. But at the same time, the weaker dollar, which could support the gold chart, could be limited as the risky asset demand is getting higher and the stock market is getting more affected and it's getting more profitable for the investors. So the invest towards gold is getting less. So while these data are positive for the gold, it cannot be such a brilliant data for the gold price. On the stock markets also, we can say while these numbers are fine and good for the stock market and can support the S&P 500 above 6,000, can support the Dow Jones about 42,000, but still their real earnings are increasing. As also we know that they should be more cautious because the tariffs, the real effect of the tariffs is still under question because they are not started in reality yet. So putting all these data together, we can say that okay, we have to still be more cautious. So positive for gold, positive for stock markets, but more cautious. On the cryptocurrency market, but not as they are not a good positive numbers for US dollar index. About the Bitcoin, the inflation is under control. So the asset which is against the inflation wouldn't be so happy with this because no need to use it against inflation because the inflation is low. At the same time, the risky market demand is increasing, so it's a positive for the Bitcoin and the cryptocurrencies market generally. So which means putting together these numbers could be somehow positive, but they are not going encouragement data for cryptocurrency market, but they cannot be the negative as well as for energy and oil price. At the previous weekend, at the beginning of this week, we put the 60 and 64 range for for oil market, but now we can say that depends on the ongoing not depends, considering the ongoing positive data, we can expect the oil price also to increase, energy demand increase, especially getting closer to while we are getting closer to summertime. At the same time, we see that the US inventories are also getting lowered, which we had on the API data last night. Today also we're going to have the official numbers. While yesterday we had a short-term energy outlook by EIA, and they mentioned that the increasing supply can increase by OPEC Plus by 401,000, as you know, started from this month, from May. We can say that okay, now we have to be more cautious about the supply and demand balance because the supply is getting higher while the economic growth is getting lower, so the demand cannot increase as much as the supply increase. So that should be more cautious idea. I mean, the more cautious outlook for oil. So that's why we can say these numbers, well, they can be positive for the oil market, but it will be in the way that it can hold oil price higher, but it cannot increase it much more. So 62 and $66 now could be the next range for the oil before the next week's Federal Reserve meeting, and we can have a better idea of what's going to happen in the markets. That was what happened as inflation numbers and market reactions expectations. Hope it was helpful for you. If you had any other question, don't forget to write in the comment section. I will try to get back to you as soon as I can. Have a good time. Bye bye.